How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was collected on July 23rd, 2019. Here is a snapshot of the positions held by the institutions as of that date. And so let's begin by taking a look at gold. So what do we have going on here with gold? Well, remember, the data that we're going to be looking at represents this candle here, and as you can see, price broke out of that range to take it a little bit higher, and what caused that was an increase in long positions, and they also decreased short positions. So when they increase long and close shorts, it causes price to rally upwards, but then they brought it right back down here. So long exposure is 84% right now, which is above the average. Longs are above average and shorts are below average. So this would lead us to believe that there's going to be more upside to come. But is it going to happen from this area, or are we going to get that drop that we have been expecting? It's hard to tell. So I would think that we're going to get that drop, simply because when we take a look at the other pairs, it's very likely that we're going to see a move on those charts that will be aligned with a drop in price on gold. Okay, so now we take a look at oil, and we can see that oil longs dropped from 545 to 537,000, and so closing longs, which is what caused price to drop from the weekly area of supply. And what did they do? Increase shorts, 121 to 140. That's a big jump. Okay, 121 to 140 is a big jump. So they closed longs for profit taking, and they also added in shorts. This is a good sign for the bigger move downwards that we are expecting, right? So going to expect that to continue with that type of movement in the weeks to come. Now we got the dollar. Dollar right here, right before it broke through the weekly area of supply. What do we get? An increase in longs from 36,000 to 42,000, but we also see that they increased shorts from 9 to 13,000. Okay, so that basically drops long exposure from 80% to 76%, but longs are above average size and shorts are about at average size right now. So this does support a bigger move to the upside, and that is what we are expecting. But remember, we got weekly supply right there. Okay, and I've detailed what we should be expecting in the months to come in terms of what is going to play out on this dollar chart. Alright, now we go over to the Aussie, and we see they were taking profits on shorts for quite some time, and again this past week from 84 to 77,000, and that came as price was consolidating right at that descending weekly trend line. And what took place since? Massive drop. Alright, so the weakness is what we were expecting. We were expecting a rally from here, but we knew it was either going to be the descending trend line or the weekly area of supply that was going to cause price to drop, and it just happens to be the weekly trend line that is being used. Shorts are still the aggressor. Okay, if you take a look here, still the aggressor, and there is room for them to reaccumulate a short position, larger short position, to cause price to go even lower. So that's looking good. Then we have the USCAD. Okay, an increase in shorts from 63 to 69 as price was consolidating right down here, and they closed off longs from 42,000 to 38,000. So taking a look at the sentiment, what can we see? We see the coloration of the cells are bearish. Then you look at the net positions, they are bearish. Well, they would be bearish after a drop like this, right? But we have to take into consideration we have a monthly area of demand there, and it is likely going to hold and cause price to rally up. We got the weekly area of supply here, and I think that is what is likely going to be taking place in the week and weeks to come. Now we have the US Swiss franc. So as price was consolidating here before the rally up, we see them increase longs from 17 to 20,000, and they also increased shorts, but just slightly from 5.9 to 6.8 thousand positions. That dropped long exposure by 1 point, but increased net positions from 11.7 thousand to 13.1 thousand. Both longs and shorts are both cooled off, but we can see longs are a bit more out of cooled off territory than the shorts are. So it is likely we're going to see a continuation of that move to the upside. Now we got to get to the euro. We see longs close out from 155 to 149, and we also see shorts closing out from 243 to 236, which reduces total size but keeps long and shorts at the same. 61% short, 39% long. Slight decline in net positions as well, so not telling us much. What is telling us something is that this weekly area here, that momentum shift has been broken, creating new supply, which we are waiting to have validated. Once it becomes valid, it will allow for a bigger push to the downside on the charts. So the obstacle has been removed. It now has room to drop even lower on the charts. Now we go take a look at the pound. We were expecting weakness on the pound with higher time frame forces pushing lower, and that's what took place. Price rallied up into a daily area of supply that we had mapped out and is responding exactly from there. Shorts are more aggressive. Longs cooled off, expecting a bigger drop on the pound. Next we have the US dollar, Japanese yen, and what we can see here is they close some longs and increase a little bit of their shorts. Not a big move. You take a look here, it's somewhat bearish but also neutral. So hard to determine what the institutions got up their sleeves right now, but what we can see is based on the higher time frame forces, we are expecting a bigger push to the downside. We're just currently responding from this monthly area of demand, which is pushing price up, and it should come all the way up to this area here before we see some more weakness coming into the chart. Now in terms of the Kiwi, we've been expecting this to get even weaker. It stopped here and is now starting to head lower. So as price was rallying up, they increased longs, which is what would be necessary to cause price to rally up, and they pretty much did nothing with their shorts. But bottom line is, you could tell that shorts are the main focus here, and now that price is turning over, I am expecting it to continue to head lower. And that's pretty much it for your CFTC report for July 23rd, 2019. Hope it was a good, informative one for you. And if you have more questions, just visit us at www.whiteoakfx.com. Thank you.